Well, good morning, traders. And clearly the theme that we're taking out in terms of US equity markets, apart from the fact that we've seen this grind higher and we've seen the Dow moving up for 10 consecutive days in a row, we're eyeing the record consecutive run back in 1987 where we saw 13 consecutive runs. You know, this market just doesn't go down. You've seen 9 record closes in a row, which is just unbelievable to see. This market doesn't want to go down in any shape or form. If you look at the S&P, we've seen 12 consecutive days where the market hasn't moved in a range in terms of the close high to low by more than 30 basis points or 0.3 of a percentage points. Yeah, that's a record run since 1927 when records actually began. So the range is absolutely non-existent at the moment playing through. It's been 110 sessions since the S&P futures saw a 1% upside move and 56 sessions since we saw a downside move. Now, in terms of implied volatility playing through markets, you know, we can talk about the VIX, which obviously measures implied volatility in the S&P over the coming 30 days. But I want to have a look much more short term. If we look at intraday realised volatility playing through the market last night, that hit 3.1%. That's a record low. You know, that's actually lower than what you'd see on Christmas. So the market has never been calm in terms of that intraday move. If you look at it on a 10-day realised move, that got down to about 2.5% last night. Again, record levels. And actually implied volatility, if we go back to implied, is lower than what we see in the FX market as well. And that's rarely ever do you see that situation. So not only have you got non-existent moves playing through in the S&P and the Dow, but you've got implied volatility and realised volatility just doing absolutely nothing at the moment. It's very, very boring markets, and they say never short a dull market, and that's exactly what we're seeing. You know, we've got CEOs, more CEOs than we've ever seen, talking about record earnings or better than expected earnings and their earnings outlook coming through. No one's mentioning Donald Trump. We've got synchronized global growth playing through in EM and DM for the first time since 2010. You've got liquidity which still gets pumped into these markets, not just from the Fed, but specifically from the Bank of Japan, the ECB and other central banks as well. And also inflation so low at the moment that people aren't concerned about rampant tightening playing through markets. So yeah, it's onwards and upwards in these markets. Valuations don't really mean a lot in the US markets at the moment. It's just momentum, it's trend, and it's funds which have been suppressing volatility, these risk parity funds. And that's really the view that we're taking at the moment, that there's, you know, no reason to be selling these markets at the moment. But when we do see a sudden shock, it's going to be very, very chaotic indeed. A 3.5% sell-off in the S&P, for example, would potentially put about 15 percentage points on the VIX, and the VIX future is probably about 5.5 percentage points. So they could get very chaotic indeed. That would cause a concertina effect through various markets if they saw that playing through. Now, in terms of the lead today, we do have a somewhat positive lead, so we're calling the market up about 12 points at the moment. You know, will we see the buying kick in from around 10:30 once the market's had a fuller chance to digest the moves we've seen in iron ore, which has moved a bit higher today, up to just nearly 3% higher on the spot price. Iron ore futures had every opportunity to roll over last night, didn't. We saw the buyers step back in. That looks quite upbeat. Oil prices are a touch lower, but you know, BHP this morning is expected to be up about 1.4%. We're watching earnings. We've seen IOOF report. You know, they've come out with some decent numbers there. You know, net profit above the expectations. The dividend seems just above, and their funds under management have clearly grown from 2016. The stock trades above 1010. If you see a close above that level, you know, it's a momentum trader's dream. The stock looks great on the daily chart at the moment. I'll probably be staying long in that name and just trailing stops up. I think that looks pretty good. But BHP looking pretty positive. You know, will we see the ASX push into the top end of that, into that 5,800 level? Of course, a lot's going to ride with the banks. Are we going to see CBA continue that bullish theme? We are hearing, and we've seen news that CBA management, the executive committee, including Ian Narev, will not have a bonus this year. Of course, that's nicely on the PR side to try and win back, you know, the hearts and minds. Obviously, everyone's aligned for tomorrow's earnings numbers. That could be huge. They could play through the financial sector as well. So that's definitely something to watch. But clearly, the themes at the moment is positively trending equity markets. They don't go down, and the volatility implied historical, you know, near record lows at the moment. So, you know, certainly onwards and upwards here.